Hey, it's 6:30, so we'll go ahead and get started. Thank you for joining our peer group training on fundraising. I'm Renee MacArthur. I'm the AAUW CFO, and we also have members from our finance committee doing the presentation, Carrie and Carol and Andrani. If you want to go to the first slide, Carrie. So here's the agenda. We're going to cover fundraising information from the website, what's deductible for donations, and what you have to report to donors, guidelines for events with ticket sales, auctions and deductions, sales tax, scholarships, and question and answer at the end. So if you have any questions, go ahead and put those in chat, and we'll go over those at the end of the presentation. Want to go to the next slide, Carrie? So there is quite a bit of information on the AAUW California website, and this is where you would go to find it. Under branch tools, there's branch finance, and the topics under branch finance are handling donor contributions, fundraising events, and selling items. And there's also prior peer group presentations that are recorded, and we're recording this presentation as well. So it'll be posted to the website within a week or so. And we'll also have this PowerPoint presentation on the website to refer back to. If you could go to the next slide. And Drani, you're going to cover this, right?
Yes. Yes. I'm Indrani Chatterjee. I'm part of Finance Committee, and I will talk about fundraising donor deductibility. In our AUW California, we have 501c3 branches and 501c4 branches, but I believe most branches are 501c4. Anyway, we will talk about donor deductibility in 501c3 first and then C4. What are the IRS rules for 501c3 donation? Contribution to 501c3 organizations are tax deductible. If an individual itemizes the deduction on Schedule A, Form 1040, then the full amount is eligible to be deducted from the taxable income. A donor taking RMD required minimum distribution from IRA account that is also deductible to qualified 501c3 organizations. AUW branches with 501c3 status, the donor can write check directly payable to branch for special project fund, and the branch's 501c3 status provides tax deductibility to the donor. Next slide, please. What are the IRS rules for 501c4 donations? According to IRS, donation to 501c4 nonprofits are not tax deductible to the donor. AUW branch with 501c4 status, they must inform donors to write directly check to special project fund, which is the 501c3, and to claim tax deductible as charitable contribution. Exception is AUW fund. Donation to AUW fund, contribution to the branch,
it's like $8.99.
earmarked for AUW fund are tax deductible. Next slide, please. Also, I hear the noise. Can you please mute everybody? Fundraising duties to donor. Acknowledgement to donor. It is very important that donors should be acknowledged and appreciated for their donation to our organization. Nonprofit 501(c)(3) organizations want to make sure that donors feel appreciated, recognized for their generosity. In addition, IRS regulation requires that before a donor claim a tax deduction for a charitable contribution, donor must have a bank record or a letter from the organization documenting the contribution. The following are the required components of the acknowledgements. Cash contribution, as per IRS regulation, 501(c)(3) organizations are legally required to acknowledge contributions of 250 or more in writing. Next slide. The acknowledgement letter must include the following information: a statement that the nonprofit is a public charity recognized as tax exempt by the IRS under Section 501(c)(3. Amount donated if cash or cash equivalent, the date of donation was received, the statement that the organization did not provide any goods or services in return for the donation. This is very, very important. Next slide, please. Cash contribution. There is no legal requirement for gift acknowledgement for contribution of less than $250. It is recommended to send thank you note to all donors to acknowledge their support. Examples are donation by the branch members, donation from AUW Tech Track program supporters, donation from local small business owners. Next slide. Non-cash contribution, less than $250, a receipt from the organization showing the organization name, the date and location of the contribution, and the description of the property. Over 250 or more, a written acknowledgement of the contribution from the organization that includes a description of the property, whether the organization provided the donor with any goods or services as a result of the donation, and a description. And more information, if any individual or on behalf of AUW 501(c)(3 or 4 branch, please contact tax professional for additional help. Now Carol will talk about sales tax.
Thanks, Indrani, and good evening, everyone. Thank you for joining us. If you attended the webinar that we did a few months ago, we did talk about sales tax as something that is involved in things where people are purchasing. And since many fundraising events involve purchases of some kind, we thought it'd be good to go into a little more depth on that. So just some examples. If there are events that involve a meal purchase. Also, certainly silent auctions or live auctions also are a popular fundraising activity. We're actually getting ready to have a silent auction in my branch here in Nevada County. And also merchandise sales. Some branches may sell merchandise at branch meetings. And so there you want to consider, if you're selling things, that if they're tangible, they're mostly taxable. So that's a good way of remembering it. But if it's services or gift certificates, those are generally not subject to sales tax. So go ahead and the next slide. So all of these aspects can be involved in what we call fundraising events or special fundraising events. And you can see here that fundraising events are reported specifically on both the federal and the state, the 990 and then the CTTR1. So there you want to consider a number of factors. First of all, if you're having a fundraising event, what is the fair market value of the goods or services that the participants who buy tickets are receiving? Because if they have a ticket price that you typically want to charge a ticket price that's more than the value of the goods and services. So the donors will have, if you're a 501c3 branch, then you might want to communicate to the donors that a portion of their payment is tax deductible. By the way, one thing we weren't able to do a survey at the beginning of this, but maybe could you just use the hand raising icon? And if you're a 501c3 branch, just raise your hand raising icon so I can get an idea of how many of you are 501c3 versus 501c4. I see 1, 2, 3, 4. Okay, so about, I guess about a quarter of our group are 501c3 organizations. So that's where, as Indrani was saying, if you're a 501c3 organization, donors that make a contribution to you are entitled to deduct the value of their contribution on their taxes. So that's where you have to acknowledge them and so on. Now, if you're having an event, sometimes you get part of what it takes to put the event on donated by another donor, but the participant may still receive the value. So you want to consider that. And we'll see an example of this in just a minute. One thing we discovered last year when we were working on this event is that, or in this on this fundraising webinar, was that for large branches, if the branch has a revenue of more than $50,000, that means that they're going to have to do a 990 EZ. And if the gross income for the fundraising event is more than $15,000, there is a special schedule that has to be attached to the 990 that shows a little more specific breakdown of where that went. So let's go ahead and take a look at a sample event on the next slide. So here's a typical event. I've heard of a number of branches having something like an author luncheon. And by the way, we are going to hopefully ask you for your ideas and experiences in fundraising at the end of this webinar. But for the author luncheon, we're going to charge the participants $100 to attend, and we're expecting we're going to have 50 participants. The event itself is going to have a lunch, and we're catering the lunch, or we have a restaurant that's providing the lunch for $35 a person. We also are anticipating that the wine for the lunch will be $8 a person. We've hired a musician to give some, nice music as people arrive. And so that is going to be $5 a person, $500. And of course, it's an author lunch. So we bought a book, a copy of the author's book, which the participants are going to get. And that means that the fair market value of what each participant is going to get totals up to $73. So that means that of their $100, $27 is a deductible contribution, and you want to disclose that in the literature that goes out advertising the event. Now, as the plans are moving along, one of the members says, I'd like to underwrite the cost of the wine for the event, so I'm going to pay that $8 a person for the wine. And so therefore, that's going to reduce the fundraising expense because the branch isn't going to pay for the wine, but it's not going to reduce the fair market value of what the participants get. So it doesn't change their deduction. The other thing, because we'll talk about sales taxes in just a minute, but when we get the books, we're buying those already taxable, and so therefore we don't have to pay tax on them twice, because you've purchased them as a taxable item. Okay, let's go on to the next slide. So sales tax, as we discovered in our earlier webinar, sales tax is pretty complicated, and that the sales of merchandise, tangible things, requires the collection and the remittance of California sales tax. So for more information, you can get publication 18, which will tell you more about taxes than you probably ever wanted to know. But it goes, especially the food items that I recommended strongly in our earlier webinar, that if you are serving food, that you use a restaurant or a caterer where they're going to know what are the ins and outs of the taxability. I was involved in a fundraiser for another organization, and we sold soda and we sold water and we sold alcoholic beverages. Well, we had to keep track of all those things separately. Obviously, the alcohol was a different category. But interestingly enough, soda was taxable and water was not. So that's where you want to know what the ins and outs are. So there's publication 18, and I believe when you get the download of the PowerPoint, that link would take you right to the Franchise Tax Board in publication 18, but you can also look it up. Okay, let's go ahead to the next slide. So donations for the auctions, if goods that are going to be auctioned off are donated, that is and it's a 501c3 branch, then that donation is tax deductible to the donor. But if you purchase an item at an auction, then that is only tax deductible if the purchase price exceeds the fair market value. So you want to have on your auction bid sheets what the fair market value is, and in that unusual thing where something is so popular or the activity is so popular that people are just bidding up the price, it is possible, if it's a 501c3 branch again, that a purchaser might have something over and above the fair market value, which would be a contribution in their part. But the California sales tax is due on the full sales price of the auction item that is subject to tax. Again, remember, if it's tangible, it's taxable. If you have something like a gift certificate or the ability to spend the weekend in somebody's beautiful country home, so that is not a tangible thing, and therefore it's not subject to sales tax. The other thing is that the state takes it upon themselves to take all of that you calculate all of the taxes when you file, and they will transmit any portion that goes to local entities. I know here we have a special tax in place to help some fire mitigation strategies. So it's not we have a slightly higher tax rate than just the state sales tax rate. In order to collect and remit sales tax, you need to have a seller's permit. If it's just a one-time event, you're just doing your auction, the one time, you just get a temporary seller's permit. I actually spoke to someone from the tax board yesterday, and they said, well, it's actually very quick to get the temporary seller's permit. You can do it online and you get it immediately. And that's good for just doing a one-time thing. So that is sort of the ins and outs of having fundraising events in which some kind of sales are involved. And I'll turn it back over.
The next slide, Carrie. I'm going to cover scholarships. I think most of the branches do scholarships, award scholarships. And the IRS defines a scholarship as a payment to a candidate for a degree at an eligible educational institution for eligible expenses. So in order to be not taxable to the recipient, they have to be in a degree program and has to be part of the U.S. Department of Education database for which institutions qualify, and it must be used to pay for tuition and fees for either enrollment or for books, supplies, and equipment at the educational institution. So amounts for other expenses such as room and board, travel, optional equipment does not qualify for being non-taxable. You could still give a recipient amounts, but for those other expenses, but it would be taxable to them. So the next slide, please. And under this administration, as we're all probably well aware of, it's getting more difficult to meet the what's called the blind process, where scholarships are awarded on an objective and non-discriminatory basis. So AAUW National actually has done some webinars on the subject, and one thing that they said is they um, recommend that you avoid using words and phrases that might create compliance issues, such as saying female applicants only. So you should identify a large enough group of potential beneficiaries, state the purpose of the scholarship, the selection criteria that you're going to be using, and use an impartial selection panel. No panel member should benefit from the selection of the recipient, like if it's your, daughter or son, and supervise the scholarship, making sure it's being used, meeting the reporting requirements, and letting the applicants know what the requirements are for how the money can be used. Jenny, did you have a question? You have your hand raised? Oh, you're on mute. You're still muted.
There. Okay.
There we go.
I had to find the right button.
Sure.
So could we dwell a moment on female, not using terms such as female applicants only?
Mm-hmm.
So how do we get around that for things like Tech Trek and for offering scholarships to high school women?
Sure. I think if you say you're promoting gender equality, um, phrases like that instead of, it's just for female applicants. But then I assume that you would have to um, allow males to apply. Does anybody have experience with how they're giving the information out about scholarship criteria?
I'm particularly I'm not so much concerned about our high school applicants because we get recommendations from the high school counselors and we go from those. But we also offer reentry and deferred entry scholarships to women who have had to put off going to college for, whatever reason, family emergencies and so on. Uh, and we've had flyers in the past that do have the word women in them, like scholarships for local women.
Mm.
Uh, is that breaking the rule here?
Yeah, I think it could create problems if you use gender as a criteria, um, saying it has to be female or women, anything that's specifically identifying a particular gender seems to be problematic now. And I don't know exactly how you word it, so you don't run
Yeah,
into that
okay, well,
problem.
I'll have to go research that. And one third thing, and I apologize for taking too much
Oh,
time here,
no
but
problem.
um uh back on the criteria that the um if it's to be non-taxable, The scholarship can only be used for tuition fees, supplies, and equipment, not used for travel, room and board, and a few other things. What about for childcare?
I don't think that qualifies for eligible scholarship expense.
Because that is one of the things, particularly for our reentry students and older students starting college. They've told us that if they didn't have that extra money, they wouldn't have been able to pay for childcare to go to school.
Mm. You could still award them the scholarship. It's just that it would be taxable for the child care portion.
Well, and wouldn't the recipient be able to say how it's spent? I mean, that they could spend it all on tuition and books, and save, you don't have to spend it all at once. Sort of.
Right. Yeah, they could
advise,
use the
yeah.
scholarship for the tuition books and then pay for the child care, out of their
Yeah,
own
yeah,
funds.
I hear what you're saying. Okay, we're going to have
So the
to.
taxable amount could be a very small amount, relatively.
Well, how do we monitor? I have this in the chat. How do we monitor how they're using the funds? We know they're enrolled. We know they've got to pay $8,000 in tuition. How
Mhm.
do we decide where they're spending the money? Why can't we?
You can ask for records like tuition payment to the university or receipts for books.
It,
One way to not have to document how they spend it is if you give the money directly to the university on their behalf, then you wouldn't have to require all the documentation.
so
You're saying we have to document how they're spending the money
No.
They have to document, and you're supposed to be
and
reviewing
provide
it
us with the documentation?
in order for it not to be taxable to them. If you give a scholarship and they haven't provided any documentation as to how it was used, then you would have to give them a 1099 reporting it as taxable income.
Okay, so there's two issues. One is it's taxable to her. The other issue is tax deductible to the donor. So, okay, so you're saying it's our responsibility to have them give us their tuition bill?
I would think that once we give them the money, to put it bluntly, is their problem at that point. They own the money. And if they choose, I'm thinking fast here because this is going to change some of our processes, that if we notify them when they receive the award, that as long as they use the money for tuition fees, etc., it's non-taxable, then it's up to them to get the very broad hint that they need to spend it on that and not on, let's say, childcare. I
Right.
don't see why we would have to get between them and the IRS and have them document to us how they're spending their money. Right?
But you also can avoid that by giving the money directly to the college. So they're giving, here's $3,000 on behalf of Jane Smith.
Well, that's what we already do. We send the
Yeah.
check to the college,
Yeah.
but it's
So,
indicated for a particular person.
right.
Yeah,
So if we do that, we don't have to worry about the tax situation.
exactly. Yeah, it's if you're giving it directly to the individual,
I see.
then
Okay.
they're paying the university or college that you would have to have, documentation that they used it for tuition or books or supplies.
Okay. So if we give it to the college, it's up to them.
Right.
Okay.
So that's recommended way to do it if the college allows that. Okay, do you want to go to the next slide? So this is what we already talked about, providing oversight to determine if the scholarships are being used as intended. Records should be retained to demonstrate adherence to the best practices, and information how you evaluated the applicants, and identification of the recipients, including any relationships between the scholarship recipient and the branch, and the amount and purpose of the scholarship, and reports concerning the recipient's performance and use of funds. So this again would be if you gave the scholarship directly to the recipient. You should keep all this documentation. So we were also wanted to spend some time just discussing fundraising ideas. These were some from some branches that had fundraising events that were successful. An author's lunch, I think we already mentioned that, where an author would speak about their books and you could combine that with a silent auction. Dining at restaurants. I know I'm a member in Danville. We had a local restaurant that had a particular night where anybody who went on that date and during a certain time, 10% of the proceeds were donated to AAUW. Dinner and trivia night, have a dinner and then have teams competing for trivia questions. A home tour is another idea, where you pay for a ticket to tour various homes in the community, and giving donations, lessons for donations. Like one branch had a candy making session. And so everybody got to learn how to make some candies from recipes. And they had a minimum donation. It could have been more, of $35. So before we go to all the questions in the chat, does anybody have any ideas that they want to throw out there and that have worked for your branch?
I always hear about branches doing book sales or plant sales.
Uh-huh. Has your branch done that, or you just heard about
No, but the elevator branch has, does a plant sale, and they also, you know, do it before Mother's Day, when would be a nice time for somebody to buy a plant to give to mom.
Yeah.
You know, the timing.
The only fundraiser the Morgan Hill branch has is the wildflower run, and that's become very successful. The money any money that we make goes right to ISPF. So our special projects fund within the group of AUW branches here in the Bay Area. So that's how we deal with it. And that's where our scholarship money comes from.
Oh, good. Yeah, I've heard that's very successful.
Mhm.
At the Morro Bay branch, we have a garden tour.
Mm-hmm. My branch does that as well. It takes a lot of planning, but it raises quite a bit of money. Somebody's putting a few ideas in the chat, working with a local florist. Oops. Find that one. Oh, local woman-owned florist to sell holiday wreaths at $10 earning per wreath, sold for $40. Donna Hamill said a tea. And Susan Hunt said stay home non-event, just send in money.
I love that.
That's easier. Well, thank you for your ideas.
Are raffles recommended against or for?
So raffles, we covered raffles in this section in the webinar that we did on last time on government filings. You do have to have a state permit to do a raffle. And then you know that essentially the rule is that 90% of the money that's earned has to go to the charity's purpose. So I know that I moved to California from another state a few years ago, and one of the things that was really popular in that other state was something called a 50-50 raffle. So everybody would buy a ticket, and then half of the money somebody was the raffle prize. Well, obviously you can't do that if 90% of the income from the raffle is supposed to go to the charity. But they are absolutely a legitimate fundraiser. There was a question in the chat about the weekend in someone's vacation home, and for the deductibility of that. So if going back into Indrani's presentation, the donation of the home, you know, the owner of the home donating the stay, that's a non-cash donation. So your acknowledgement is a little different. You're describing what the donation is, and then you leave it up to that person to claim, you know, whatever they're going to as a donation on their taxes. But the purchase of that, it's not subject to sales tax, and you can sort of figure out, well, what would it be to rent a house in this area or something, if you want to provide an acknowledgement to the purchaser that but again, you can also just give it as a description of what it was and let them fight it out with their own tax advisor rather than trying to establish a value.
Right.
So let's see if there were other questions that haven't been answered. Um,
I have
Go
just a
ahead.
comment. All of this information comes from either the IRS or the Franchise Tax Board, which have publications. And maybe if you have the publication numbers, that would be helpful. Just because you can't take notes fast enough
Sure.
to do.
And you'll actually find links to all those publications on the California AEUW website in the section that talks about fundraising.
Good.
And I think there is one reference or link to bingo on the next slide, Carrie, or the next one after this. Yeah. So if you're thinking about doing a bingo event, fundraising event, there's specific requirements for that, which I don't think we're going to go into all of them, but these are some references that you can look at. So there are a few questions. If a branch member designates a gift as SPF, does state or the branch send the acknowledgement? I think it would come from the SPF, not the branch.
It doesn't hurt to do both.
Yeah, no, it wouldn't hurt. We already talked about the vacation home. Somebody asks, they have a local store that donates a percentage of sales for a day or a week. Is this a fundraiser, donation, or a sponsor? Well, it's a fundraising event for the branch and a donation from the store. So it's both. Does that answer? It was Beth that had a question about that. I think it's similar to the idea of the restaurant. where they're collecting all the revenue from that meal, but then they're turning a portion of it over to the branch. So it's a donation on the part of the restaurant, and it's a fundraising event for the branch. How do you monitor how recipient uses funds? I think we talked about that already. If it's going directly to the recipient, they should have receipts for tuition paid or books or however they use the scholarship money. Um, we give a check to the recipient, so we have to have proof of what they do with the money. Yeah, if you give it directly to the recipient. Does the rule to not limit the scholarships to women come from AUW or the IRS? Um, it's just kind of a recommendation because of the way the Department of Education is, going so much against anything that suggests DEI. So we don't want to see any funding removed because they're saying that, it was not, was discriminatory for just women.
And also, I just posted in the chat, National did a webinar on this subject last spring. And so I put the information that you can copy that down, and you can actually access the information on National's website. Funding Futures was the name of it.
Right. It's worth, listening to that webinar.
Yeah, I just don't understand it. It doesn't make any sense to me. And I think about scholarships that may go to a certain population, like Native American, and aren't they discriminatory if they don't allow non-Native Americans to apply? It's very bizarre.
Yeah.
I can't swallow it. I have a hard time with that.
Well, I think we all do. We're just kind of struggling to understand how to present, scholarships so that it doesn't raise any red flags.
Yeah, are they really going to be monitoring us? I mean, in reality, when they're talking about Greenland and Venezuela and on, are they going to be monitoring our little AAUW branches?
Probably not, but the very name of AAUW, I guess, could suggest it's only for women.
Right. Well, and there are lots of organizations that you have to have a business to be in their organization, or you have to have a certain degree to be in that, and so, it's
Not a problem we're going to solve tonight, but in that webinar, it was interesting that at least one of the branches, it was people all over the country, obviously, and there was a branch that happened to be one that was near where I used to live, and they were getting pushback from the colleges. So it was happening. I mean, the colleges are worried about their funding, and so crazy time.
Yeah, unfortunately. Sarah had a comment that I think is good. She said she thinks that most scholarship winners' income is low enough that reporting the income from a scholarship would not make any added tax for the recipient. So say that their only income was a scholarship for the year, they wouldn't even have to file a tax return unless it was over something like $10,000, which I don't think any of the branches are giving out that largest scholarship. So that does give you more flexibility in giving a scholarship to somebody if they need it more for childcare than, for tuition. And those were all the questions in the chat. Does anybody else have any question or discussion about anything?
Renee, I don't know if we covered this one. There was one from Christine where she asked, how do you enter a non-cash donation in your branch books?
Yeah, so basically, the for for donations in kind, which would be a non-cash donation, you want to enter the value of the donation, but also the value of the expense that it's offsetting. So you're not artificially lowering the, what the expense for the event was. Like the example I gave was somebody donated 500, or I guess it would have been $800 to pay for the wine. So you would say that $800 was a donation, but also an $800 expense was there. So to the bottom line, it nets out at zero. And I know that one of the things that's important for events where you have some donations, you want to know what was the real cost of doing the event. So you have a good record for planning the next time you do it.
Those are all good questions and ideas. So unless there's anything else, thank you for joining. And if you have any questions later, feel free to email. Or reach out in some way.
Will you make these slides available on the state website?
Yes, they will be.
Okay.
Oh, wait, it looks like there's maybe, thank you for doing this. So thank you for joining.
I see two more chats over here. Oh.
I think it was this thanking us for the presentation and
Okay, yeah.
yeah.
Thank you all for attending.
Thank you. Thank you all. Yeah.
Okay, bye.
Hi, thank you.